We are so excited to have Small Business Association back on the table. If you may recall, Pat Borowski did part one of this series with one of our local SBA representatives, and that's been recorded and placed on our YouTube channel. So if you have not watched that yet, please go there and watch that series as well. Today, we've moved up to the national level, the SBA, and we are so happy to have Thomas Sullivan with us. Thomas Sullivan is the Vice President of Small Business Policy at the U.S. Chamber of Commerce, and he has spent a lifetime working on behalf of small businesses around the United States. He was previously an attorney for government relations practice, Nelson, Mullins, Riley, and Scarborough. And he served under George W. Bush as a liaison with Congress on small business administration and small business matters there. So he's got a huge background in this area. He's definitely a national, international expert. And why it's very important for us to have he and the other speakers from the SBA on is because that really affects a lot of our membership who are business owners, a lot of our work going in supporting our local communities. So we're really honored to have Tom today, and hopefully we can learn from him and support businesses in our communities moving forward throughout 7610. So again, thank you, Tom, and I'll turn it over to you.
Thank you, Rich. I am going to share. There we go. So first of all, Rich, the honor is truly mine. I want to make sure that folks on the line know that I am hugely grateful for the Rotary organization. I grew up just outside of Boston and was blessed to receive a Rotary scholarship that helped me attend Boston College. So when Pat had reached out and asked whether or not I could help out a little bit, I jumped at the chance. So Rich, I appreciate the introduction. It's also great to know that my old friend Mike Penders is on the line as well. Mike was a mentor to me when I was starting in the Washington, D.C. policy arena at the Environmental Protection Agency, and we've kept in touch since then. So I'll jump right into a quick outline on some federal resources that are intended to help small businesses. Hopefully there'll be plenty of time for questions and answers towards the end that will get into some nitty-gritty, not only of what's going on now, but what we can expect in the future. So if we wound the clock back 7 or 8 weeks ago, which I think from a lot of us on the line seems like 7 or 8 months ago, when it was clear that the pandemic was going to reach America and that there would be a significant economic impact because of it, U.S. Chamber of Commerce, where I work, we really used the muscle that we have to try to work with Congress and make sure that our economy would survive the pandemic and come out the other side with strength to allow for a steep and quick recovery. The U.S. Chamber of Commerce represents about 3 million businesses. 96% of our membership, which includes partnerships with about 500 trade associations and 1,600 state and local chambers of commerce, 96% of our members have fewer than 100 employees. About 75% of our membership has fewer than 10 employees. So when we used that collective muscle to lobby Congress, and we were successful to pass 3 laws in 3 weeks, there are pieces in each of these laws that are intended to help small businesses. I'm going to focus primarily on the third law that happened just over a month ago. And again, it seems like just over a year ago, but just over a month ago, it's the CARES Act. And within the CARES Act, Congress put significant amount of money to help small business. So the two funding streams that Congress bolstered through additional funding are SBA's disaster loan program, which is not a new program, and I'll explain a little bit about that. And then a brand new program that was created by the CARES Act called the Paycheck Protection Program. And as many of you know, because you live in the collective DC area, nothing is actually legitimate unless you have an acronym. So the two acronyms for these funding flows are EIDL, which stands for the Economic Injury Disaster Loan, and then, of course, the Paycheck Protection Program, which is nicknamed PPP, which is hard to say without spitting on the screen when you're talking on a webinar. The first part of the two funding streams that were given significant amount of money was the SBA's disaster loan program, EIDL, Economic Injury Disaster Loans. And it's very important for folks to understand that this is not a new program. This is a program that has existed for about 60 years. It's also, I think, important to know that this is not intended to be a quick cash infusion. The disaster loan program was created to help communities recover after a disaster. So after a flood, after a tornado, after a hurricane, after a fire. It's not intended to bring quick liquidity and quick cash when we're experiencing an economic crisis the way we are now. So it has a role, but that role has been a little bit misunderstood in the middle of the pandemic. And I think deservedly so, because when there's no income coming into a ton of small businesses, and the US government says we're here to help, then I think it makes sense that folks would think that would be quick and immediate help. This program is not quick. I'll repeat, it is not quick. The first applications for EIDLs were on March 17th. March 16th. They are just being funded last week and the week before. So you guys can do the math. It is not a quick process. Now, the eligibility requirements to apply for an SBA EIDL are 500 or fewer employees. That's really the primary criteria. But also, the terms of the loan are 3.75% interest or 2.75 for nonprofits. It's a 30-year fixed term, no interest or payments for over a year. There is one part of the EIDL program that is brand new. Congress recognized that just saying in 6 or 7 weeks you might get an economic injury disaster loan may not actually keep a small business afloat. So Congress created a grant. It's called an emergency EIDL grant. I think SBA is calling it an advance. That advance is up to $10,000, and it is dispersed a little bit quicker than the actual loan. That grant does not have to be repaid. The application, once this application goes back up online, keep in mind that it ran out of money last week. SBA is trying to reduce the backlog. There are millions of applications for EIDLs, and they needed some time to address the backlog before restarting the application process, and that is expected to happen any day now. Congress, in the latest round of funding that was passed into law last week, restored $60 billion in new funding for the SBA disaster loans. I think that's pretty much it about EIDLs, but we could certainly talk a little bit more about them in questions and answers. Now, the brand new loan program, which is intended to be a little quicker and also rely on the private sector, private banks, is called the Paycheck Protection Program, the PPP. Very important. There's two key distinctions between what we're going to talk about now and what we just talked about a few minutes ago with the SBA disaster program. First of all, speed. The PPP loans are supposed to be faster. The acknowledgement by Congress that without revenue coming in, small businesses need cash now. The second difference is that SBA gives direct money in its disaster program from the federal government to the small business. The Paycheck Protection Program is different. It relies on private banks, lenders, credit unions, community development financial institutions called CDFIs to disperse the loan amounts. And because of that, it's intended to be a little bit quicker. Now, when you hear reference to $349 billion of loans for small business or $350 billion of loans for small business, this is the program that they're talking about, the PPP program. This program also ran out of money last week, actually 2 weeks ago. But last week, Congress restored funding. They restored $310 billion more in lending. It's quite likely that amount will also actually get run through by the end of next week. So the demand for both of these programs is through the roof. And I think that has been a real eye-opener for folks like me in my position, as well as in Congress and in the White House, realize the pain that is happening out there on Main Street and the demand for capital for small businesses to survive. The terms of the PPP loans are 1% for a 2-year term. Now, what makes the PPP loans so attractive is that if you meet the calculations that Congress wrote, you can actually get the loan turned into a grant. So here's how it works. So first of all, eligibility. Small businesses with 500 or fewer employees are generally eligible. Congress realized that there are some small businesses that are a little bigger, and they are eligible as well. The loan amount is actually set in law by Congress. The way you come up with the amount is you take your monthly average payroll times 2.5. So the way it works is you look at 2019, or you look at 12 months prior to making your application. You take your average monthly payroll, and you can't go above $100,000 in that calculation for an employee. So if you have a senior manager who's making $120,000 a year, you're only able to take up to $100,000 of that person's salary in your calculation. But you take the monthly average payroll calculation, you multiply it by 2.5, that's your loan amount. Now, when you get the loan, you fast forward 8 weeks. At the end of 8 weeks, you go back to the bank or the lender, and if you can show that 75% of those loan assets go to payroll, and the additional 25% go to utilities, rent, mortgage interest, or interest on prior debt obligations, then the loan converts to a grant. So the loan is forgiven based on that calculation, 75-25, to a grant. And I suspect there are going to be questions about that calculation in what we're talking about, or in the questions and answers. Let me try to kind of get a couple of those answers out of the way because they come up all the time. First of all, how does a small business calculate the 1099 earners that are part of their business? So for instance, you're a restaurant owner and you've got a guitar player that comes in 3 nights a week. They're part of your team. They make your restaurant as successful as it is. But that singer is not your employee. You pay that singer as an independent contractor, and you issue a 1099 at the end of the year. That singer cannot be used in the calculation for your payroll. The singer themselves can apply for a PPP loan as their own independent contractor, and they use net income on the 1040 Schedule C line 31 as a basis for calculating their average monthly earnings, multiplying it by 2.5 and coming up with a loan amount. But we get all the time, we get questions about, can we use 1099 earners in our calculation? The answer is no. Another question is, well, wait a minute. Governor Northam has told us we can't open, but I got a loan and I've got to pay 75% of payroll to people who aren't allowed to come to work. That doesn't make sense. And they can't actually work from home because what I do is unique to the storefront that I run. Now, unfortunately, that is exactly what the intention of the law is. The intention was not to create activity and bring people back together in a storefront small business environment. The primary purpose of this was to get money into the bank accounts of workers. It was a realization by Congress to say, look, this is a health pandemic. And if you're sick or if your loved ones are sick, then you need cash to get them better, to get medical attention. And so the whole craziness from a small business perspective of forcing employers to pay their workers not to work actually makes a little bit better sense. I'm not saying that it makes complete sense, but it makes a little bit better sense if you understand that the intention was to put money into the pocketbooks and wallets of workers. Now, there's obviously an intended additional consequence of trying to help small businesses survive the pandemic, but the primary goal by Congress was to put money into the bank accounts of workers. And so that can sometimes explain some of the weirdness. Now, Pat asked if I could describe a little bit of the pain points in some of these programs. So I'll do that. No one anticipated the rush to try to get capital that happened 3 weeks ago, because that's when, on April 3rd, is when these loans first became available. April 10th, the first chance that these loans became available for independent contractors. And so there was a lot of frustration by small business owners who weren't getting return calls from banks and lenders. There was frustration from lenders themselves because they weren't getting the guidance necessary from Treasury and SBA to make the loans. And then obviously there was frustration amongst the political folks in Washington, D.C., SBA, Treasury, Congress, at the White House. That frustration is very explainable. If you're going to set up a program that does more loans in 14 days than is generally done in 14 years, it's not going to work perfectly. And this is no exception. In the restart that happened this past Monday, SBA is trying to stagger those loan applications to kind of deliberately slow down the process so that its technology can keep up with the demand. There's also the belief that if they slowed the process, then some of the small businesses who don't have their banker on a speed dial might have a better access to the loans than they would otherwise. It's unclear whether or not those things are working. I still get calls 24 hours a day for people asking for help, and I try to point them in the right direction, but it breaks my heart that I'm not able to help everybody. Just a quick snapshot of some of the statistics. In the first round of funding, there was 1.6 million loans. They averaged about $215,000 through about 4,900 lenders before they ran out of money. Now, they restarted the loan program just this past Monday, so all these days kind of blend together. It's now Thursday. So Monday, Tuesday, Wednesday, Thursday. So in 3 days, there have been 960,000 loans totaling about 90 billion. So we're about, I don't know, math is hard for me. We're about 1/3 of the way through the additional $250 billion that Congress appropriated, worth $90 billion. So rough estimate, these loans are arguably going to run out by the end of next week. So by the end of the first week of May, probably be going back to Congress and asking for more money. At the U.S. Chamber of Commerce, when the pandemic hit, we really had a very simple guiding principle, and that was that no business and no family should be bankrupted because of the temporary economic disruption caused by coronavirus. We continue to try to meet that principle. And one of the ways that we're trying desperately to meet that principle is to get information in real time out to as many small businesses as possible, whether it's a webinar like this or through a website. We are updating our website at a minimum twice a day, every day, to make sure that different small business communities are accessing information in English and in Spanish. Our small business digital portal is at uschamber.com/CO. It is not for coronavirus, by the way. But our small business digital portal, which has been up now and running for about 19 months, has been a godsend as far as how we get information out to small businesses. We have, I think at last count, 12 different easy to understand guides, whether it's on the PPP loans, SBA disaster loans, what do you do if you lose your health insurance? All of these types of guides intended to help small business are easily accessible through this small business digital portal. With that, I am happy to take questions.
We do have one. Sorry, Dave. We have one question on the chat, and the question is: are PPP programs going to put cash in the hands of employees in addition to any unemployment benefits they may receive from the Commonwealth?
Great question. The answer is no. If you receive a PPP loan and you bring an employee back, you are bringing them back on payroll. So from a technical perspective, you are rehiring them and taking them off unemployment. That should prompt dozens of additional questions on your chat because this has proven very difficult. The attractive unemployment benefits are sometimes more money than the employee is earning back on the payroll. And we are really pushing Congress that when they bolster the program with more funds, they've got to take care of this. There's got to be more of an incentive for small businesses to be able to bring those employees back. Because as I know from a lifelong small business advocate, the business owner themselves wants their employee to be okay. It's bad enough that they're saying, sorry, we had to close our doors. But they don't want to bring an employee back if it's going to put less food on that employee's table. So there's a disconnect in that situation. And unfortunately, those increased state unemployment benefits expire in mid-July. And so we don't know what's going to happen, but what we do know is that we do not want a conflict between small business owners and the state unemployment systems on who wants to take care of that employee more, because that was never the intention of either of these programs.
Thank you, Tom. Dave, you have a question?
Yeah, I did. On one of the previous slides, there were some private lenders mentioned, like Square and Cabbage, and they were also offering PPP loans. They aren't the same kind of deal that the government is giving. people.
So Dave, great question. And I kind of skipped through this mostly because I'm seeing this PowerPoint in my sleep. And so I try to skip through as much as I can. But I'm glad you brought me back to that. So first of all, very, very important. There's no flexibility in the terms of these loans when it comes to what a small business owner gets. So any small business owner that hears this wonderful deal that is a different interest rate than what we described, 1% over 2 years, don't do it. There are more scams than hours in the day going on right now. So that's not directly the question you asked, but I know there's a lot out there, and I just wanted to flag that. The way that this program, the PPP program, was rolled out is that the first loans on April 3rd were only available through 1,800 lenders. Those are called SBA lenders. Those are banks, primarily banks, that have worked with SBA for dozens of years, and the electronic systems work. I don't know how many of you who are on this webinar have had an experience of buying a new laptop or a desktop. You hook it all up, the power goes on, and then you have to print something. And it never, maybe you guys are better at tech than I am, but it never works. The first time you hook up a new computer with your printer, it never works. The same thing occurs when a bank sends the electronic information into SBA. Those ones and zeros, the data that has to be communicated is like a computer and the printer. They have to be in sync. So SBA's original lending on April 3rd, they wanted it to go smoothly, so they only included those SBA lenders. Now, as they got the system going, and it was, I'll tell you, it was a rough start, because when that SBA program had hundreds of thousands of applications come in within the first 30 seconds, it did not go well. I mean, Pat asked if I could talk about pain points. That's a pain point, and it exasperated a lot of the frustrations that I talked about. However, it was less of a pain point had every bank and lender had immediate access to the program, because that would have made things a lot worse. So what happened was, after the system started running more smoothly, SBA said, you know, other lenders are able to participate in this program. So non-SBA lenders came in, and then the fintechs also came in. So PayPal was the first because they worked with another bank, but then Square, Cabbage, On Deck, and actually, if you run your QuickBooks program by Intuit, they're actually lending PPP loans off of the QuickBooks platform. This is all brand new. This is all part of the April 27th restart. And the beauty of that is, at least in my humble opinion, many of the fintechs are better at the lower dollar loans. So it kind of makes sense from a chronology of the program. The bigger dollar amounts for larger small businesses were the first to get funded. And now, hopefully, we're moving a little bit more towards a lot of the self-employed and independent contractors, which some of you may know make up over 80% of the total 30 million small business population. The fintechs are a little bit better at moving the lower dollar loans than the banks are, just from a cost per loan perspective. So having them in the system has been a tremendous help. Probably more of an answer than you wanted, Dave, but
That's great.
happy to do it.
Thank you.
Hey, Tom, I have a question. This is
Sure.
Mike Penders again. There's a concern by many on the Hill, including Mitch McConnell, that funds going to the states may be used to subsidize their pension obligations and in the high tax, high pension states. What is your analysis of the state funding and vis-a-vis the federal funding mechanisms, and how to get that money to small businesses and employees who are more directly?
So, Mike, you might remember when we worked together, I've always approached things like the simpler, the better. And so I'm kind of applying that same principle to what's going on here. The more complicated the financial transactions are between who has the money and a small business's bank account, then the less likely it's going to work. It's going to take longer. There's more red tape that small businesses just simply can't afford to deal with right now. And so we're trying to help our state partners approach it that way. But we'll see. I mean, there are a number of federal, what are called lending facilities that are going to come online for larger dollar amounts starting next week. Those are intended to be the least paperwork heavy. And so it will be interesting to see how they work. And I don't know whether the states are going to be able to tap into those. There are a lot of state and locality programs that are outside of this presentation that honestly, we won't know if they work until several weeks from now. But again, as clear a line of sight that can happen between where the money is and the small business owner's bank account, the better. And the more simple it is, the better, because that means quicker liquidity for small businesses.
Thanks, Tom. That's about, I think that's right.
Tom, this is Pat Borowski.
Hey, Pat.
Talk a little bit about, well, let me just say, one point is always to remind our small business community that the banks that are participating and or may additionally participate in this program are connected to the FDIC program. And certainly our observation over the last 10 years in particular, there have been a number of banks that have developed, especially in immigrant communities, that are used by a lot of small business people that really are not in the FDIC system. So I think that's number one, to be really aware of that. My next question is, number one, do you think we are going to be seeing a third wave here of support for the small business community? And then when maybe some other people have asked a question, if you can kind of talk about what kind of questions and things should small business start thinking about as they start to look at and put together a reentry program once, the quarantine starts to be lifted?
So first of all, on the non-FDIC thing, so just by a show of hands, how many folks have eaten at Ben's Chili Bowl? All right, I see in the audience here, one. Anyway,
We're in the we don't know.
Ben's Chili Bowl, which is certainly an icon of Washington, D.C., and I would not classify Ben's Chili Bowl as being non-networked or outside of the banking system, so you got to take this with a little bit of a grain of salt. But they actually got a PPP loan on Tuesday from City First Bank in Washington, D.C. That's called a Community Development Financial Institution, CDFI. And there are many communities around the United States that there is a historic distrust between some of the minority small business owners and the banking system. CDFIs are intended to fill that gap. And so it's up to people like me to be getting the story of Ben's Chili Bowl or Everett and Johnson out in San Francisco, if you guys have ever had the best barbecue out in Oakland, California. I got to get those stories in front of more people to break that distrust, because not everyone has an account with Chase or Wells Fargo and Bank of America, which are all doing an incredible amount of small business lending. But there are some communities that are disconnected from that, and the funding from Congress is intended to try to help those CDFIs get the money. But Pat, on your point though, there are a lot of scams going on, and I don't know. Maybe it was Mike Penders, maybe it was a small business owner who told me, if it looks too good to be true, it probably is. And I think that's you can get all the legal analysis you'd like, but that simple principle, I think, comes in handy when you're being targeted by a ton of scams that are out there for these wonderful small business deals. Pat, you did ask about additional funding, and in particular, additional legislative help that will help small businesses reopen. We are right at the cusp of having those discussions. So we are trying to collect information from states like Texas, Florida, Georgia, Oklahoma, who are all in various stages
suggested that I contact you.
That are in various stages of restarting or returning to work, and trying to advise Congress on what their next stimulus package should look like. So right now, there are two pieces to that I think are at least important to note. The first is that nothing is going to replace the value of capital. I mean, I know that there are tons of policy components that are important, but from a small business perspective that will continue through May at a minimum, capital is still the primary need. And we've surveyed our small business owners 2 weeks ago. We're coming out with another survey next week. Capital is still way at the top of the list as far as the need. But that capital's got to look a little bit differently. There are different needs for when you're shut down and for when you're reopening. So if you're a restaurant, and I think I was reading this morning that there in Georgia, restaurants are allowed to open, I think, with 25% capacity. Well, you're going to need capital to survive, not just because you're shut down, but because now your rental and lease payments for your building are the same. And you're only able to serve 25% capacity. You have to have access to capital to get past that phased in reopening. So I think the capital's got to look a little bit different. But the other thing that we're starting to counter are worries about liability. If a small business owner is doing everything that the governor of Georgia has said they have to do, then we're saying that there should be the ability that that small business to not be targeted by a class action lawsuit that would basically shut them down worse than a pandemic would. So we're looking at ways to say to government, both national and a state level, what policies reward a business from restarting and what policies punish a small business for restarting. Now, obviously, we would put our emphasis in those policies that reward the small business. And that might be an oversimplification, but capital and liability protection have been high on the list already. And we're going to be working with Congress to make sure that this next stimulus includes both of those for the betterment of small business.
Okay, thank you, Tom. And the other point I'd make too is that somewhere in the back, when the federal government was mandating that first round of flu vaccines way back when, they provided an excellent indemnification provision that did hold at the state court level as well. For the producers of the vaccines, for the people who provided the vaccines. And so I think something like that we can look, at least that'll give us a roadmap.
That's a great example of the difference between, if you look at that whole chain of what does it take to develop the flu vaccine and what does it take to actually execute a strategy to distribute the vaccine, right? You look at that entire chronology from a business perspective. The policy you just mentioned rewards folks at every step of the way. And it's a great example of how we're going to be pushing Congress to approach a return to work going forward.
Tom, I have a question for you. I belong to a club here in Fredericksburg, Rappahannock Rotary, and we have a very large club, and we have a large number of small business owners. And I'm wondering if you're available. I've been trying to keep a pulse on the small businesses that are in our club, and some folks are doing well, some folks not so well. And I'm wondering if we're going to try and set up a webinar and have some of the bankers and perhaps Susan Spears from the Chamber of Commerce here locally and a few others provide that webinar to them to be able to explain some of these things. And I was wondering if a person such as yourself would be available to participate in a webinar like that.
Happy to. Thank you. Pat will make sure to connect us. Thank you.
Okay, very good. The second question I had was, and this is because my wife has been bugging me about this. She has a friend of hers that is on a 1099 from a nail salon.
Yeah.
And, she's not working now, obviously. So should she just go to her local bank that she uses and apply for relief under PPP?
Yes. Well, so two questions. One is if the nail technician, if she, I don't know, is it a he or a she?
A she.
Okay. So if that nail technician uses QuickBooks to kind of keep track of her income and stuff, I would strongly advise looking within that QuickBooks platform for loan options, PPP. That's kind of an easy one. I'm not giving an advertisement for into it, but it's within the system, and might provide some benefit.
Mm-hmm.
So the simple answer is if she has a relationship with a lender, absolutely go to that lender. And this is one of the values of Rotaries and local chambers of commerce. I have never met anyone in a local chamber that isn't led at least by a branch manager of a national bank or a CEO or senior person at a local bank.
Sure.
And if you go to that lender who you have a relationship with, even if they're not offering the loan, they're going to get you in touch with the person who is. And so I think it's a really, really good idea for that nail technician. If she has a relationship with any lender, just ask the lender and they'll direct them in a better place than any of the federal resources could.
Super. Thank you, Tom. Appreciate it.
Yep.
Okay. Well, Mr. Sullivan, we really do appreciate your time today and your insight. This is very valuable as we move forward supporting our communities. And I know once this thing gets put up on YouTube, it's going to get a lot of looks at as small businesses in Rotary around our district will be using this to better their knowledge of what their opportunities are. So thank you again for your time and your expertise and what you're doing to help the United States during this unusual time.
Well, thank you, Rich. And thank you to all the Rotarians. You're wonderful people doing great things.
Thank you.
And this is when our country needs you the most. So thank you.
If I can just say one more thing, everybody please remember that we have recorded this session. It is uploaded and it will have the slide resources. Tom is providing that to us. And that will go up on the district Facebook as well as the district YouTube channel. The YouTube channel also has part 1, which was David Hincapie, business specialist from SBA, going through some of these issues as well. So the two form a package, and we did send out to you the regulation that better defined what an independent contractor and a self-employed individual would do, and the very narrow definition of what nonprofits are available to participate under this. Understand that C3s technically have no members. So therefore, they are dependent on the kindness of others to get their money, and therefore they can participate in the PPP program. So thank you very much, Tom.
Thank you.
Pat.
Terrific. Yeah, we will get any questions back to you and any suggestions that our people have. And everybody take care.
Thanks, Pat.
Folks, next week we have our RI Director-elect, Peter Kyle. If you remember, he was supposed to be a couple weeks ago and he had some technical problems. So he will be back joining us next week and sharing his vision for the upcoming Rotary year. So we hope to see you all next Thursday, same time,
you.
same place.
Thanks, everyone.
Thank you.
Great.
Take care. Good seeing everyone.